I'm going to tell you about Manhattan real estate values over the past decade. So this morning, I got a report from the folks at Corcoran that shows the appreciation rates for Manhattan residential real estate from 2010 through the end of 2019. And the first thing you might ask yourself is, well, CT, we're in 2020 and the coronavirus has totally changed all this. And it hasn't changed anything in the past. But what's important is you kind of need to know the context of where the market has been, where it was headed, and particularly maybe in relation to other markets as well, other boroughs, let's say, and so that you can use this understanding as context for where it looks like it's going, okay? Because there are certain aspects that are going to change because of the coronavirus and certain aspects that are not. So with that in mind, let's look at the Manhattan numbers. So in Manhattan, the 10-year annual report here, we have growth rates by neighborhood, and we're going to start with the uptown portion here. So this is above 34th Street. One of the things you will see, and this is true in Brooklyn, true in Queens, true in Manhattan, is that we're seeing a lot more appreciation on the condos versus co-ops. Now, looking at the first category here, the first neighborhood, Beekman and Sutton, okay, 0.1% average annual growth rate and for co-ops and 6.3% for condos. Now, what's interesting about this is across the board, you're going to see greater higher pricing on condos and greater appreciation. And part of that is because people value condos more. Part of it is because condos are what the developers are primarily building. So they're coming in and they're always at higher prices, or not always, but they are typically at higher prices than resale properties. So 70% of the New York City real estate market is co-ops, although that number is probably creeping down because all the new builds are condos. So some of this difference in appreciation between co-ops and condos is because condos are newer and more expensive and co-ops are not. Now, another thing to note too, and this is true for all of Manhattan, really all of the boroughs, is that if you look at the difference between the 10-year annual growth rate for on average price and the 10-year annual growth rate for median price, then you see a difference. So greater median price growth in Beekman and Sutton at 1.3% for co-ops and 8.3% for condos. And that's a huge difference. And that probably has to do with new development that's happened in the past 10 years in that neighborhood. Also, anything on the east of 2nd Avenue with the Q train around is, I think, appreciating faster than the rest of the Upper East Side, at least marginally. So Carnegie Hill, we have 1.4% versus 4.6% for condos. East Harlem. So this was an interesting. East Harlem is 0.3% and the median appreciation was 0.4%. That is a fairly low appreciation, and I would have expected more in East Harlem. But there are various factors to East Harlem that make it difficult. Flatirons, 3.7% appreciation for co-ops, 7.6% for condos. That's very high appreciation, and it shows in the median as well, 4.8 to 5.1 in Flatiron. Been a lot of development in and near Flatiron. Flatiron, I think, probably also includes Nomad, which I don't see them as listing this. Oh, actually, it would be in the below. They don't break out Nomad. So Flatiron probably includes Nomad. Nomad has been booming. So one of the hottest neighborhoods in New York City, in Manhattan, I should say. Okay, so I'm not going to go through every neighborhood here, but I want to just point some stuff out. So things that stand out here are Midtown West. So if you look at the average price in Midtown West, you get an average price over 10 years of 23.6%. Oh my gosh, that's so high, right? Actually, that's because averages are easily thrown off by large sales, okay? So now if there was So if there are new condos or somebody, I forget where the guy, which building the guy bought, spent like $200 million buying like several floors of one of these high rises. And that is going to really skew your average statistics. So in that case, what is better to do when you see something like this, instead of looking at 23% average appreciation over 10 years, go look at the median price, right? So this is a 10-year median price. And for Midtown West, you see 6.4%. That is a much more realistic number for Manhattan in Midtown West of annualized appreciation rather than 23.6%. I guarantee you that 23.6 is because of large purchases that skew the average but don't skew the median. That's an important thing when looking at real estate statistics. Okay. Stuff worth noting, Morningside Heights and Hamilton Heights appreciated. The median is up 7.4%, in condos 4.1%, in co-ops. These are big numbers. Growth in Upper Manhattan above 100th Street has done better on average than below 100th Street. Some of the places that have not done so well are the Upper East Side. The co-ops appreciated 0.6% over the past 10 years on average, 0.9% median, and 2.9% for condos and 2.3% for co-ops. Now that's better numbers if you're in the condo. So Upper West Side, also big difference between co-ops and condos, 1.9% and 9.2% for condos. But again, this is probably not taking it into account, or it takes into account new development, but new development condos, which are the majority of new development, are really pushing up prices on the condo side. So not bad for if you have a condo nearby the new development. So Yorkville is a little on the low side. Battery Park City, 10-year annual growth rate, 1.4%. Interesting that the median growth rate in Battery Park City is negative 1% for condos. Co-ops are similarly low. Chelsea has seen 6.2% for condos, 0.6% for co-ops, so on and so forth. So you can see in general, actually there was a nice jump here in Greenwich Village between 3.5% for co-ops and 10.6% for condos. And that is bared out in the median numbers as well. That's why it's good to have both the average and the median. 3.2% appreciation over 10 years for Greenwich Village co-ops and 11.9% for condos. So this is, there are a few standouts here. There's a lot of, there's been appreciation, annualized appreciation. There are certain neighborhoods that have had tougher times, like the Financial District at a negative 1.2%. But it is good to note that over the past 10 years, you have seen some average appreciation. My guess is that you are looking at around, upwards of somewhere between 2 to 4% on average for the whole city as a whole, or the borough as a whole, I should say. But they're so different than neighborhoods that it's hard to take a big number like the overall number and apply it to every neighborhood. So that's why these reports are great. I highly recommend you checking it out. If you're considering any of these neighborhoods, just talk to me, or I'll send it to you, or we can have a conversation about it online or privately. So I hope this has been a little bit interesting to you. And I think you should take that and use it, keep it in your mind as we are looking at what's happening with pricing this year in 2020, pre, during, and post coronavirus, if there ever is a post coronavirus. And hopefully there will be. There should be. So with that, stay healthy, stay distanced, and I will talk to you later.